Sounds like better. Any questions so far about this morning? Afterwards, Eugene, if the slides don't match your notes, it's not a problem. Because over the years, we keep on changing, updating. But the basic principle is the same. It's different version only. It's still option 101. And please, Eugene, do not rely on notes to trade, huh? I 10 2 3 times, it's very. Why? You know, some idiot gonna whack it. Don't tell me you watch Donald Trump mean, is it? Or the poor trade representative get interrogated by the congressman. Wow, tell you a really fucking hell no face.
Watching wrestling.
Okay. Yeah, answer. What fuck you doing? You are a trade representative, you don't know what is going on yourself. I know you know because you just saw the tweet you 3 minutes ago. What the hell? Wow. Uh, you are a trade representative. You're supposed to represent on behalf of America. Then you yourself know what's going on maybe your president.
Don't know what to say.
Yeah, cannot say anything. If you want to work shit, you get shit. Yeah. And
Got his salary review lah.
no lah, actually be fair, the American government staff don't get high paid salary, but they got a lot of lobang after that. Okay, let's go. Okay, now we're talking about our numbers. Just now ask me about theoretical value. Theoretical value, there is what you call Greek's number. Why is Greek? In the past, long before computers and high liquidity markets, they use Greeks to determine fair market value, to work out theoretical value, like I asked you. So how you use it? Basically on delta, gamma, theta, vega, IV, rho, and probabilities. Probability is more recent. Okay, but historically it's only delta, gamma, theta, vega, and rho. Okay, I'll explain to you one by one later on. But all these are theoretical value. Okay, let's go inside here. So what is theoretical value? These are one thing. What is a fact? How do I calculate option theoretical value? First thing, share price underlying. It's important. You cannot be telling me Coca-Cola, $60 company options is more expensive than Tesla and the money call, for example. Okay. So now next, strike price of options. Is your option and the money in the money, far out money, did it in the money now? For all your learning purpose, you're focusing at the money only. You're not going to touch base up. Because the moment you go deep in the money, out the money, there are so many different options to choose from. Then we got problem. So and the money is very clear cut. If the market price is $165 now, then $168 now for Apple, then and the money call will be 200. And the money put will be next price will be 19750. Okay? So how many days expiry? You gonna buy a 200 put for next Friday, 6 days away, or you gonna buy an option for 6 weeks, 6 months away, same strike price, same underlying, same time. The more days to expiry you have, the more expensive the is going to be per option, not per day basis. Listen be carefully. A lot of people don't understand this. I say per day basis, not true. If you go divide option pricing, short-term option pricing per day is always much higher. Short-term, compare options value per day long-term. After I explain to you more later. Then, it's one of my favorite. Volatility underlying. As you know, okay, as you know from recently, Tesla one day go up by $50. That's abnormal about it. Daily volatility, The last 5 days before this super crazy thing happened, I think 18, 19, $20 only. These two are the least important ones. Interest rate. If the interest rate 4%, okay, and suddenly for every reason interest rate go 4%, and suddenly interest rate now become 8%, the option price increase or decrease? All things equal. If interest rate now is 4%, now suddenly go to 8% for whatever reason. You think option pricing will increase or decrease? If the environment change from 4% to 8%,
Oh, 4 to 8 go up. Should go down.
go down? How about you? Go up? How about you? Eugene? Angie don't mind. How about you? Current risk-free interest rate is 4%. It's around 4.38 lah. Okay, because 4%. Okay? And now the interest rate now, instead of interest rate, for whatever reason, Donald Trump play games or China play games, now they go 8%. Okay? So the option, all things be equal, option premium increase or decrease? Not me, I guess. Logically, must go up. Why? If you can get 4% interest risk-free, then the options are X price. If the interest rate increase to 8%, the option price must increase so that to attract people to go to option market. If you got option market at 2%, 3% return, and the risk fee is 8% return per year, guaranteed by the God we trust, American Treasury and American government, who want to go and play option with a 3-6% per year? The option price must increase. The cost, no, option price is a derivative. Option price must increase. Share price may drop. You know why? A lot of companies got a lot of loans. Now the interest rate from 2% now become 4, become 6, become 8. Then definitely the share price will drop. Why? The profitability, the revenue, EBIT definitely will all drop, right? Yeah, but options will not work. Buy shares, you are holding a share, holding a physical share. You get dividend, you get capital gains, right? Options is the derivative of deployment of money, is the deployment of money to get more money. So if the bank, if the Singapore Treasury, US Treasury give 8%, then you have to put 8%. Unless the returns for option side is 3 times, 20%, 24%. That's what I mean. Remember, when you buy a share, you're investing in the company futures. The higher, the more company make, the more money the company make. You can do more share buyback, you can do more dividend, whatever, dividend payout, whatever. But options know that. Options is a derivative to make money, to use money to make money. Okay? So if all things be equal, the interest rate go high, super high, the option premium must correspondingly increase in price. If the thing is super high, the company share price must drop. Because why? 4% become 8%, become 12%. Then all the companies, even Apple, the great Apple, also got loans. Must go and pay the loans. Pay the debt interest rate. Understand what I'm saying so far, John? So you are right in a logical sense. Remember, when you use options, you are not investing in the company. Okay, you are using money to take a position in the company, hope to make money within a specific time period. Eugene, okay? When you invest in the company, different. I want the company every year, every day make more money, every year make more money. When I make every money, my share price must increase. Increase not enough. Warren Buffett do share buyback, or give dividend, or give stock or share stock split. Okay? So remember, options is not an investment. That's why people say invest using options. I said, don't really understand about. You use it options were mainly for trading. Of course, you can use options to buy shares at the cheap price you want to buy. Saya nickel puts. Okay? So this interest rate. Then dividend rate underlying not so important. The dividend underlying mostly affected the call side only. But most of the time will not affect the option pricing. Okay, only one time it happen. The only one time these dividends can affect the option pricing. Only one period only one incident. The company gives special dividends. The company $90 company special dividend $15. Option price effect, call side affected because the call side why call side affected? Because the call side have the right to be converted into long shares. Let's say now the company is let's say the company now is $90 company, and you have sold you have a 100 call option, and the company now is $95. But the company gives special dividend of $15. My call out, my $5 call out the money, is worth a lot of money. Why? Because I can convert my 100 call into 100 shares. Thomas, you're idiot. You're idiot. Why you convert 100 shares? Why you convert 100 shares? Because why? The market 95. Excuse me. By then, if the special dividend come out, your share price will shoot up or go up, right? I can convert my buy call 100 into long shares. The person who sell the call, if I long 100 shares, convert my option 100 call into one long shares at $100, the seller short shares 100, correct? And the $15 dividend who pay? The seller of call option got paid. Okay? This one hard earned lesson, okay? What the hell? Why the hell? All the money give me bonus. Then after discover, I must return back the models and more to cover the dividend. Because because I sell a call, I must what? I must give options. I sell 100 call options. I must sell the shares to other people at 100 less. With the $100 call up, with 100 shares, option shares, the guy can convert, can get special dividend of $15. You mean so what he give the seller $5 extra. But the seller one not fast enough, must go and cover the $15 special dividend. Short shares give dividend. Long shares collect the dividend. Okay? This type of things books don't teach me. This one is only kena. Like why like that, So I say earlier, just be careful lah. And this one also apply to spreads. Okay, apply to spreads. Okay. Because the buyer, the buyer of your short leg may be different from the seller of your short leg. Okay. So just be careful. Special dividend, very you better do something with it. Okay. Most of the time, it's special dividend that drives something. Okay. Before we go further, just all this type of thing is theoretical numbers. All these, ladies and gentlemen, all these numbers we know. Share price we know. What's the strike price we know. How many days to expire we know. What's the volatility of underlying we can see. Based on standard deviation or based on ATR or based on Bollinger Band, 28 days or 18.88 days, whatever. I don't care, but it's known. So dividend rate also know. Okay, risk-free interest rate all know lah. So this is what I call when you plug in. So you plug it into what I call a theoretical grid formula, will give you theoretical price. Understand so far? So here's that. So what's the theoretical? I use what theoretical very specific. Means that it's on theory only. Reality option pricing is dictated by who? Is dictated by theoretical formulas or dictated by what? Huh? Who's the market? Buyer seller will dictate. Recently, our friend here, I don't know, have queue for 42 cents, $4.20. Got few at the market give a nice bonus price of what 70 cents extra. Is it? That's market lah. Queue to close at 42, 420 lah. Okay, take profit lah. Market give him 4.90. Then lucky I think don't change to $5 to get fuel. Then because Thomas to get free $5, no, because he queued at 4.20 first. Let's say now he got buy order. He want to sell at 4.20. John himself sell at 4.80. You want to sell at $5, take profit at $5. Who get fuel first? The cheapest price get fuel first. Thomas, I queue 5 days earlier. I don't care. Because it's 420, he prepared to buy the lowest price. His trade must get fuel first. Even he put a trade last minute. You put trade 5 days ago, right? No, wait. The lowest price will get fuel first. Then You queue 490, right? You queue for 5 days, 5 nights, right? You get ask if there's still orders to fill. Question?
Under my comment yesterday, like, it's too early, never get.
Please, whatever is you queue price, as I scolded one of old one strong one the students one said, the price you see there is indicative value. I think you know that, John, right? It's only when people buy and sell to you at that price, that even definitive price. That's why you see the funny fluctuating, right? Playing quite fast at ring rate, $180, $220 francs. It's called price fluctuation. This feed is feedback, consolidated feedback, and market maker level. Or if the broker is direct exchange one is directly feedback. It's called they pick up the lowest highest price from 18 exchanges. Yeah. Okay. Now let's go inside. Before we go further, let me show you the 3 theoretical models. Bimodium, Black and Scholes, and I call this BNS. Okay. Okay. Okay, appreciate it. Okay. All these look carefully, all these formulas are just formulas that very often be adjusted. So sometimes you see the IV number for different broker, different broker have different values. Okay. There is no such thing as definitive model. Remember, he said, I will come only when Shen got lag got trades, then come. Okay? So now, all these market formulas can be adjusted by different parties. Who's the different parties? Your broker, your what you call your prime broker, your exchange, your market maker, all be adjusted. Okay? Why? To suit their own parameter. Brokers own these parameters. Remember, when you buy and sell, you don't buy and sell direct to the New York Stock Exchange. You buy and sell to an ABC broker. If you screw up and lose $50 million, $50 million, the broker must cover the on spot. That's why you see a lot of people now, a lot of brokers trigger happy. Force close, trigger what you call force close orders. Don't need, they base it on the dollar money you spend. Of course, wait. Because if you're going to put in $50 million, of course they talk to you first. Yeah, anything you want $200,000, they can micromanage it through risk management. Okay, they can close the trades anytime. So I trade missing. Okay. Remember just when I teach you time, we're talking about fixed risk, spread risk. The spread risk can be converted into open risk anytime. You know why? You buy one call, sell one call. If the buyer of the sell call activate and convert to shares, your $500 trade now can become $30,000, $40,000 trades. Okay. There earlier summon. Recently, we got this Facebook guy, quite famous for it. I heard he don't teach, but I believe he heard he got a lot of followers. Okay. Now he got liquidated because his spread trade short legs tell them got signed, convert to shares, and $100 million worth of shares. His cash only halfway change, $100,000 worth of cash. Auto liquidated. After because he actually auto liquidated in such a way that he lost $400,000 US. Remember, a lot of people got this mindset. I don't close my trade, therefore I not lose money yet. Yes, I lose money, guy. I repair, adjust the trade. But you're not reducing your risk. If a trade repair means you are pushing your risk from today, yesterday night, Friday night, push it to next Friday night or next week after Friday night. It's called repair. But repair do not solve your risk. In fact, a repair trade most probably increase your risk. Means that become just another time become chengo. Repair is increasing. Okay? Anyway,
Read one more thing.
he roll over the trade. That means he continue the trade. Can close these strikes and open a new strike further out in time. Let's say now you sell a nickel call and lose money. Can you not go and sell close this on this Friday night? sell one and sell one in July can ah. 明白啊 They call rollover. This trade expire on the 17th Friday night. I'm losing money. I repair my trade. I close my 200 short call, 200 short put losing money put. I close my trade from 17th of April. I push it to July 2025 can push it further in time.
Because I got one option, not option trade is one option when I click right. Is to roll.
Don't roll over. Roll over means what? Push it further in time. Very often not prepare because well, this Friday this trade I'm losing money, correct? 17 die must cut must lose money, correct? So I instead cutting loss or whatever, close the thing or whatever, simply close the position, open a new position, same strikes, one factor, or adjust it to different thing, but push it to further up in time. I'm right, market is wrong. I just keep pushing. It's a bad idea. More expensive. You are losing money already. When you lose, most time road one repair, you lose money, then you do something especially lose big money. Wow, so ching. But never mind, I don't admit loss. I just push a problem up to August can close that trade, close 17th of April trade, roll over to August can That will increase your capital risk exposure because you're repairing a bad trade already. The bad trade repair like that, right? It will after repair something get bigger and bigger lah. Because every time repair, your risk get lesser. Your risk will definitely increase. No such thing as you repair a trade, roll over trade. If actually repair a trade and risk get lesser. No such thing one. I guarantee. You're losing money. You must cover your losses first. You cannot tell me that you make money. Okay. No, this is worse. Pray and pray. You pray until expiry. This one continue. Wake up. Go and sleep again. Pray again. Eugene, I'm saying Eugene. Very poor guy. Tired. I'm very reflecting here already. This one not a good idea. Okay. So gentlemen, ladies, lose the trade, cut it off, start a fresh trade. Not you pray a trade, pray for 3 months, 6 months, then just trade go against you. Sometimes you're lucky, market will come in favor again. But as a trader, bad idea. Okay. Loss. Based on your time. Remember, that means you spoil your market. You really break your objective. Every trade you go in must have a prime objective, secondary objective, capital, and duration. Every time when you keep on rolling over, all these are defeated. So is it useful? You can see I cross everything out. All these are all useless one. Black and shows win Nobel Prize. Unfortunately, that was decades ago, and it's useless because it's only suitable for European options only. Now we got bimodal model, we got BNS model, etc. All are useless. Why useless to us? Because we are not market makers. Why you say we are not market makers? Almost I can sell options. Yes, you can sell options, but you're not making options. You're selling options based on market price. It's not based on. It's not I call you. Hey, sorry. I want 8,000. I want 8,000 call on SPX. For 3 months. Don't have, correct. Then they say now I'm a big time fat wheel from Singapore. I want to have 10,000 call SPX for December this year. Don't have, not listed. 10,000 is very big already. Current price 5,000 only. So I don't have, correct. I just I call my big friendly private broker. Private broker say call okay, can. How many contracts you want? I make for you. Then will call me out. Okay, okay, this we quote you at this price. Then suddenly if we trade exchange rate 2-3 days or 3 weeks later, suddenly come out some idiot from Singapore come out 10,000 call far out the money call for December this year. Okay, we can call them out, but not at your level lah. If you are trading, I think the minimum looking about 500 contracts.
Trading people.
The market maker, the person who issue the options. Okay, what you understand me about issue options? Option do not exist yet. So I issue the option. Once option, once I issue already, they got buyers and sellers, right? Then the buyers and sellers buying selling price become the definite pricing already. We don't try by theoretically. I tried many 20 over years ago, tried to do it. Wow, check the theoretical price versus the underlying price. If theoretical price higher than the underlying price, okay, I buy the underlying. Because why? After X number of time, X number of days time, the market price will return back to theoretical price. Guess what happened? That means I lose money. Which one more accurate? Theoretical price or the buy selling price? So theory price we save so much money. Options can be more expensive or more cheaper. Why? The buyers and sellers have expectancy because theoretical is based on known factors. It's not based on buyers and sellers' expectancies. I'll explain more later. Do you can? So these are Greeks. I quite good at Greeks last time. I someday. So what is option pricing about? It's a theoretical mathematical formulas which is the following factors: share price, option share price, number of days to expiry, dividends to be paid out over the lifespan of options, risk-free interest rate over lifespan of option, expected market volatility or index or price. So when all the formula, all these are known, right? It's defined, you can't say one. All them is known. 25 days to explain, 25 days to explain, you cannot say other things. All these are known factors. Affect all these variables, then the theoretical result is called theoretical fair value, which can be more, which can be less.
I don't know what you're trying to say. So even you try to use the theoretical value each further your option price is
Fair, not fair.
fair or not. But sometimes even if you do use the theoretical price, you may not even get filled
Yes.
because it's
No, you will get filled. You may not return back to me. Sometimes I used to what? I used to short shares, options higher than theoretical price. I used to buy options lower than theoretical price, hoping back retrace back to me Means go back to average Yeah, sometimes it's successful but a lot of them Chinese say pay to learn. Pay to learn. Eh? So there's nothing wrong. In today's market, because theoretical price is known. It's known. What is not known is in the future is the buyers and sellers. Let's say theoretical price is $25 and suddenly all people sell. And the seller is more than the buyers. You think the price will increase. Remember, see money, trade money, we don't pay on formula. Yes, in the past I tried before, okay? And people who pay on formula, I clap for them. They have sophisticated models. Most probably they are running 5, 10, 15, $20 million funds. Okay? That means like a full-time people. For us, we can't do that. First, we don't have the capital. Second, we don't have the market data. Thomas, why don't have trade station, interactive one provide? Sorry, whatever provide to is what we call public data. Because it's called delayed public data. Institution level data is very expensive. Okay? Very expensive. We're talking about $2,000-3,000 per month per terminal. Let's say Bloomberg. You think Bloomberg make money from advertisement? Bloomberg and all the things writers all make money from where? Selling market data. Real time market data. Let me show you. I think I read a report last year. London Stock Exchange 60% of revenue is do not come for trading activities. Come from where? Selling market data. Because London Stock Exchange got historical grandmother history go 100 years, 200 years. Okay? So they're selling data. They provide real-time data. Data is very expensive. Data real-time data. Of course, if you're skillful at computer, you can use it. But our level even 50,000, 200,000 of outside 300,000, how we know? I calculated not justifiable. Okay, I met the real institution level people. Even give me friendship pricing, I don't dare touch. The software discounted a friend price, teaching call 1,000 rental the software $1,000 per month. The data feed will cost you about $5,000-6,000 USD. But I love the feed and thing. It was so lovely when I try it. But we could have priced it at $5,000-6,000 worth of. Am I that serious? Correct. So you might as well do what we have. I have distilled my 25 years of trading US market experience into something that is usable. A lot of people, I know a lot of people love the system. Wow, 6 different chart patterns, or all the dimension, all the funny color, all that. I tell you wrong. To me, I find if you are good at it, if you can, you're good. I'm happy for you. I clap for you. But for beginners, don't tell them. Okay? We just learn how to follow the money, can we? Next. So what is okay? Now we talk about IV number. Just now I showed you. Just now I showed you guys. High IV versus low. Yeah. High IV of 61, 2 to 4 cents. Low IV of 51, $7 plus. Correct. We can do it anything. So we cannot use IV to dictate what to buy, what to sell. To be fair, there is at the higher level of trading, you can do it if you're using multi-dimensional time frame trading. What is multi-dimensional time frame? Is when you trade, well, not all you are doing one dimension time frame. You all trade using same expiry, correct? 17th of April or 23rd of April, well, same time, yeah. Multi-dimensional frame means I short August, I short May, along December. Two different times. They're called time frames. This one, let's focus on one time frame. Kind of too many time frame. Most probably you get lost. Okay. So IV number is indicate. So IV number is just an indicative value in number to justify the current buying selling price of options in relation to Greeks. IV is a reactive number. It's something like your car speedometer. When you drive a car, the speedometer move first or car move first? Which one move first? The car speedometer, the speed per hour, kilometers per hour, or the car move first? Car. So IV number is the speedometer. Then what is then move first? Money move first. So if the buying pressure for the option increase in price, correct? Then all other things because all other option variables all these are known fixed one can't escape one You don't change, correct? Don't change real time, correct? This one so if there's a lot of buying pressure, the IV number will go up lah. If there's a lot of selling pressure, the IV will go down. In relation to what? All these here, Greeks. Okay. So how I know it's not good? Because end of the day, we are traders. We don't trade IV numbers. We trade what? Option pricing. All option pricing is controlled by the expectations of the market. Because it means the buyers and sellers. The buyers always buy cheap. The sellers always so expensive. No such thing as buyers you want to buy cheap. Buyers want to buy expensive, seller want to sell cheap. Not gonna happen. Even happens 5 minutes in, 3 minutes in. Before remember in today's market it's fully computerized. Okay? Okay. And now for China want to dump all the bonds away one time, it's possible because the market sensors will trigger alarm. Especially now, don't say American government. In fact, all big funds house, all the big funds and institution all got alert one. If the market price change too fast, it set alert trigger over place. Okay? So it's not easy for China government to anybody to dump shares or crash the market.
When they dump the bonds, the interest rate will increase a lot.
No, can you me?
The amount of interest US has to pay will increase.
No, it's fixed. If you go and buy a 4% bond for America, it's always 4% whole life, no? But if you resell the bond, different story. Okay, you mean if there's substantial sustained selling orders for bonds, the price must go down.
When you see the bond price or
No, we're talking about the bond price is the interest is always pegged to the bond price. Example now, somebody want to go attack America, sell, put a lot of big orders, sell bonds inside. The bond price increase. Will drop. If I sell you a bond that is 4%, I sell you for because I want to depress the bond mark. Depends on bond mark, correct? Or depends on bond mark. The interest rate and then I buy my bond is 4% at 100% at 100x. If you're able to buy the bonds at 80x, your interest rate decrease. The interest rate still stay at 4%. And let's say the bond is 100,000. Okay? Correct. But if somebody say I want to attack America, I sell this bond at discount of like 80%, 20%. So the buying price is 80,000 now. So the original buyer of the bond from government is 100%. So give 10%. Of course, I want to attack Donald Trump. I'm not happy Donald Trump. So if 100K is 4%, if you're able to buy the bonds at 80%, what's the interest rate? Must go up. What do you find the law robotic? Don't like that.
Say that there will be alarm, right? But does that mean that we deter them from selling? No, right?
They do not. They still can sell, but is it to their interest to sell? Okay, very simple. Monday, you are Great Eastern. Monday morning, not happy. Say, I want to sell 10 million shares of OCBC. Press it. 10 million shares of OCBC, market order. You know how bad OCBC, OCBC market share price, hitting limit down for a day. Correct. Somebody sell 10 million shares of OCBC. Everybody know, can see the order come in. You think you want to buy at fair price or buy a heavy discount cars? You know, I said what market order means. I beg you, I tolong you, I please buy for me any price, sell to me, sell to me any price.
China just entity as like a giant whale. Then there must be opposite side another giant whale willing to take all.
Yeah.
To be fair, the 452 billion dollars official they're holding it, I think should be more than near to 1 trillion. It's only a fraction of the US outstanding debts. I say you say a fraction, I'm not referring to marketable debts. Marketable means you can buy and sell such debts over institutional level. It's less than 2% only. Yeah. Less than 2%. How you know? 1 trillion. Current outstanding, so it depends which source you got, is 27 trillion. Last, I think US have outstanding of 27 trillion, or somebody said $32 trillion. Depends which source you come. Which source you mark up. Let's say you make it 27 trillion. 1%, 1 trillion is nothing. 1%? 10%? No. Okay? So no problem. If I really want to buy in, then American government step in, buy 10 cents, 20 cents to $1. You sell your $700 billion worth of thing for 100 billion of 880 billion market order. That's the only way to express that. Or American government make American government more quiet more smart, more cunning. I said, gentlemen, we hereby receive news of economic attack on US economy. I hereby officially inform everybody of all this is a deemed act of war against America. Anybody caught selling and doing such activities will deem an enemy combatant of the United States of America. We reserve the right to take all legal and extrajudicial legal action against you because they're enemy of you attack America. You think all the private bankers, anyone dare to sell? Everybody freeze. Are you sure or not? If you don't know, I don't care. You sell. You're running dog, right? I kill the running dog. You don't know, right? I don't mind. You sell, I know if I'm from Chinese one. Then we come and go to jail or disappear rented to the government camp in Cuba or some exotic websites in in other weird in Iran or whatever, not Iraqi because he's the black intelligence black camp nobody know one. China government have quite a lot also. America also got a few, but now it cut down a lot already. So it's fair enough. So end of the day, we don't wait too much. So if market keep low, then we just simply flow in. That's why I say your current positions must be minimum. Of course, you want to invest in you want to invest in 6 months, and for 6, 5, 10, 20 years for retirement or for your extended family members. I say go ahead, nothing wrong with it. I invest for your children education 15 years, 18 years down the road. I think perfectly acceptable. But for trading purpose, 6 months, 9 months, I don't know. Thank you.
In such at certain times, that means our option should a shorter term ones.
Yeah. Because a couple of things. One, uncertainty, correct? How does predict, correct? 2 days ago, false news. Tonight, the real news. Wow, the thing shoot up. Biggest move in 5 years. 1 day move. How I know? Next. Okay? So simple. Greeks, IV are just theoretical numbers to quantify, justify the option premium live market bid price, ask price. If suddenly option premium explode in value, the IV must explode in value. If suddenly for every reason, there's a lot of sellers or fat finger, press the price down, the IV will contract. Because the rest of the formula, number of days, strike price, risk-free interest rate, all that thing is fixed. Cannot escape one. What is variable? What is the buyers bid price, seller ask price fluctuation? Okay, and what's the carefully? Can and will move without reason. If you now, now you understand. Friend, how you make the extra 20% return? Look, move the reasons. You check Thomas, where I make money. I check the market never the underlying never move much all that. Okay. Of very limited use to you retail level traders, expect delta. And ask you question, theoretical value versus real market price. Please follow the market hall. We are not fund house trader hall. We don't have the capital to play these games. Okay. Such models, why the Greeks only use such models are used by professionals when you create new options. We are not creating new options. We are not making new options. We are not market makers. We're not price makers. We don't make price. We don't make market. Why we are not? We are price takers. Whatever price the must follow. Not like suka anything. Okay. We're not making new options. Understand? So IV okay, theoretical price okay. Dave okay, Eugene very tired. I think must mention the 3 hours class. Any more than 3 hours cannot really everybody. Then no choice. That's why my voice extra loud. I'm burning out. I'm burning out all the carbos I absorbed just now. This type of thing need qi gong energy one. My qi gong it's come from energy. Energy come from where? Carbo. Protein.
Delta is go towards right. Then gamma is
Useless.
also based on delta.
No, they have this formula. All these are linked. The problem is that we use delta as a signposting. We are not trading purely delta. Yes, we can trade purely delta, but in my point of view, trade option pricing and trade deltas option pricing much more reliable, much more subject, especially the last 7-8 years when option pricing get more and more liquid. Okay, last time 10, 15 years ago, 20 years ago, I started option. The price not very liquid because a lot of price are done manually. So we use delta numbers. Okay, use delta numbers as a reference. Okay, now let's go and take examples.
So for delta 0.5, it means that it will increase by 50 cents.
No, it may not increase.
It may not.
The delta if all other things don't change. Got time decay. Theoretically, of delta 50.50 for every $1 move in your favor, your option must increase by 50 cents. Theoretically. But the problem is what? Got time decay. Got buying, selling volatility. Means bid price volatility affected it. But we use delta number as a reference. Example, I told you for directional trading and the money call money puts, the delta must be for normal conventional trading, short-term tactical trading, delta 40 to 55 range. Too little, got something else wrong. Too much, what's going on? This delta principles only apply to trade up to intra-quarterly, up to 100-day cycles. If you go and trade January 2028, this rule do not apply. So and the money call is 0.4 to 0.5. I show you now. You see what's the delta here? Delta here is what 0.49. Here, what's the delta here? 0.40. Okay, this is okay. So let me go and find which G and G. Any abnormal companies you can look at? Huh? USO?
RGTI. Rejecting.
Okay, let's try rejecting. Look okay, this one. This one is 16 next week, so it looks okay. Okay, REGI.
RGT. Okay.
REG.
RGTI.
RG.
Reject.
T.
I. Rejecting.
Don't I really have. The computer company has to look. Now for self learning, we're not going to do next week lah. Next week is a bit tight. So why don't we do what 20 days? We do 13 days. Stop. Any abnormal now? Delta number is 46. Is okay. The put side is 40 something. Wait, the put side is 40 something here, I think. 0.44 is okay. The bid price 86, correct? You see, the ask is the ask is 86. The bid is 82. Bid is the buyer's price. Sellers want to sell. Sellers want to sell 86. So, but Thomas, why is like that? This is referring to our end user. Remember, no such thing. No such thing. Buyers want to buy 86 cents. Seller want to sell 82. Okay. So it's nothing wrong. It's acceptable. Anyway, don't mind. Why we don't run through a few things, then we come back here? OIH. Oh, you're still around. Haven't die yet. So YH 17 delta, see all the deltas okay 40 something So 40 to 55.40 to 0.55 is okay. Okay, by the way, this is not definitive rate. This is what I call a warning light indicator. Huh?
In normal environment,
Huh?
the option price should be like what 5% or not more than 10%.
No, it's not. Cannot be.
Cannot be.
This one is based on two things. Option pricing is based on two things. One, share price is one of them. That's kind of scale. This share price is fixed. Nothing wrong with it. But it's one thing, it's what I call share price volatility per day. ATR. If the test like Coca-Cola like that, every day move $1 only. Compared to Elon Musk's Tesla, before the crazy 22% move, every day almost $19-20. So the options must be based on the price action volatility. This one is known. There's another one is unknown. Is what? But it's okay. It's not unknown. It's not definitive and clear. It's a bid price, ask price. Because the buyers and sellers, let me show you something here. Let's show you here. Here, this company is what? This company OIH is $210. Okay, $210.29. And the money call is what? Next strike price. 210 is in the money by 29 cents. So next strike price is 2125. So 2125 the first strike price next to it in the money is considered what? At the money. Okay, at the money. Okay, any questions? Okay, this one strike price up. Next carefully. The ask is what? People want to sell at 1110. The buyers quote at 280. So gentlemen, if the bid ask price good, is it okay lah? Eugene? Not okay why? Sorry it's about coming almost $3 there. $3. Okay, I'll make it 280 lah. 280 divided by the bid price hey, that is almost 30%. 30-40%. Ask is 1110. So this one telling you what, be careful lah. Of course, this one is pre and post market price. Don't have, but let's take it. Now it's 11 o'clock, 10:30 on Monday night, and this is definitely bad. It's 940 940 bid is 940. Means buyers want to buy 940, sellers want to sell 12:30 Hello, that is 3 what? Not bad that is going to be $3, 2.90. Is it okay now? Also not very good. Okay, but the option the delta number is okay lah. Okay, and this company this one expect a lot of volatility. This one expect a lot of volatility. This one, the buyers and sellers is telling me this underlying got a lot of volatility. How know? Okay, let me run through first. Option moneyness. First, to be aspect no good. Next, okay, look take notes. And the money is what? Okay, and the money call is what? And the money call is very obvious and share price is 210.29. Okay, so the next strike price is 212.50. That's considered at the money. The put side, one strike price down is 210 and the money. What's the share price? The next price 210, 2125. So this one is at the money for the call. This one at the money for the put. Okay, for trade purpose only Eugene and Chris everything focus at the money. Do not be like yesterday, like Mr. B get creative. Why don't you buy in the money, out the money? Okay, the guy is a businessman, so he think that way. Okay, next. So at the money, correct. Then what is out of the money? Anybody? John, what is out of the money?
For call or put.
Let's say for call lah. Call easier to sell. Yeah. Okay, see here on top here.
师傅买 XP in the money $20.
Huh? Hey, I think maybe accounting be chun Okay, wait, come explain you. And the money, okay, I don't think you use one because the big aspect is so big lah. Let's go and find just look at what Tesla, Apple. Let's find Apple lah. Apple easier to do because why? It's more clean. The BR spread is tight. 730, 720. Good lah. Good lah. 610, 559. 15 cents lah. It's good lah. Here what? Here is what? 770, 780. All these are good price. Very tight. So just now you trade OIH, you trade the one, just be more careful lah. If you trade just now the OIH you trade yes, but not for intra-week or intra-fortnight. Well, you must trade what? Intra-month, 3-4 weeks or 5 weeks, can. But you want to trade 2-3 hours or 2-3 minutes or 2-3 days, best sub price, very tight. Because the tightness will indicative will help you to achieve faster take profit. If you think it's too loose, buy bid price $2, ask price $4, very hard to make money. They got too much, right? Got slippage because you give away too much money. Next, and the money call we agree at 200 now. So then of course out the money we what? And the money 200, so out the money is 2025 lah. Correct. Then how far? And the money from 2020 to 2.5 to how much is considered out of the money. You carefully this company from go to 300 330 So don't tell me from 200 cents to 300 is out of the money. Correct. Not precise. So how do I got this formula that I define as what? At the money, in the money, out of the money, deep in the money. So at the money we know lah. At the money is always 200 lah. It's very clear cut lah. One straight price. At the money start from where? 2025, correct? 2025 is out of the money. First out of the money here, correct? How far it go? Simple. Look carefully. Take the option premium at 200 plus the strike price over here, plus the out of the money strike price 2025. 2025 plus $7.30. Okay, make it to 750 lah. Why 750? Because all the strike increment is 250, correct? So 2025 plus 750 How much? To 210. So 2025 to 210 is considered out of the money. Next. So then how much you can say file the money how? File the money is what? File the money is what? 21250. Okay. Plus $3 plus. So round up to $5. So here 21250 plus $5. From here 2125 to 2175 is considered what? File the money, correct? This one yeah. Here file the money. Then from here 1220 onwards, I consider far out the money. Can I go to 3F or not? 4F or not? Can. But for selling purpose, enough already. And the money, out the money, far the money, far out the money. This is 4 enough already. This one will give us more precise than out the money. Out the money can be from 200 and 205 to 300. Can we more precise now? So for our normal trading, income trading, we trade far out the money. For fast and furious, and the money can. Okay? Question so far? Jean, okay?
The range for far out the money is your strike price times you plus.
Plus the option price. Because why? Let's say now we take 16 of May can 2 Fridays away can 2 months away can You can see the price here Basically the person who the buys at a 200 call is taking a position that the bid price asked by remember the rule of trading, buyers want to buy cheap 10.90, sellers will spell 11.15 want to sell expensive, so it's $11.50. This one is based on market expectancy of potential movement. It's not pretty charge. So basically, buyers, I think we calculated plus minus about $11 plus minus. That's why $11. If everybody think that's at per by what by this supply by 16th of May can go up go $220. Do you think go up by $250? Do you think at the money 200 call will be 10 $11 now? Won't correct? If everybody think everybody believe it will go up by 250 definitely option can be $10 You just understand me now? So this one is what I call, this number is called a futures number because the buyers and sellers project movement upward. Chart patterns is past 10. Thomas, analyze the last 60 candles. That's called past 10 Thomas, I trade price action. I trade last 5 candles only. That's called present tense Option pricing is always what? Forward looking. If there's a lot, suddenly everybody very bullish on Apple. You think the price will stay at $11 You know, cheap I buy. $12. $12 I buy. $30 I buy. The seller say, $14 I buy. I sell to 40, 50. $50 only just came clear. And now it's not manually, it's automated. Automated. They create software to automate this thing. So that's like when you blink one blink from $10, one blink from $13, $14.
11, 15. Okay, 11, 15. So 200 all the way to 215.
No, 200 is at the money.
Oh, okay. 205 all the way to 215.
Okay, 205 to 215. Okay, you need to round the next number. The number is the number strike is $5, right? So your 215 must round to the next high number, right? 15, no? Yes, that's it.
Yes.
So 205 here is out of the money, correct? So you say here is $15 So 205 to 220 is considered what? Out of the money. 205 to 220 is out of the money, correct? Here is what 205 here, correct? 225 far out of the money because 220 is the last out of the money. And 205 out of money then here what? Plus another $5 here So 205, 225 and to 230 is considered far out of the money Correct. Then the 230 onwards is considered far out of the money So this one will give us the expectancy range of movements. So I said, sometimes we are doing far out of the money trades, then you know that we are selling out of the money high profit trades. Okay. That's why one same trade, same expiry, we can do 4 different strategies. Sell iron condors can? Yeah. Can I buy iron condors? Yeah, can. Can I go buy straight concept put? Can. Because option can do that. Shares cannot. Either you long, you buy 100 or buy 1,000. You cannot say, I buy 1,000 and sell 500. It won't work that way. Options, you can do that. Chris, it's a bit too cheap now. Good. This one is a quite powerful instrument. So you understand me? So when I do trading, we buy at the money. Thomas, can I do all the money in the money? Can, but it's a bad idea. Why? Because if later when they ask for help, it's gonna be very hard. It's gonna be very hard for me to so-called reverse engineer or trade because I don't know. Why you choose 205? Why you choose 220, 25? I don't know.
The PWXT.
You understand? So it's a money stuff. So we think there's one at the money, deep in the at the money, in the money, deep in the money, deep in the money. This one we don't touch. The reason why we don't touch is practical reasons. The moment you go deep in the money, options is gonna be very expensive. So let's do out the money can. The moment if I go do, let's say Thomas, I do deep in the money, how? Fish 100 is $97 there. $98 there. That is $9,000. So I think for beginners, it's a bad idea. Okay? Nice. Any questions, Dua?
How would one standard deviation, which is at 66%,
I don't use it. Recently I just posted an article of 5 sigma variation cannot kill. Referring to the Donald Trump go and kill everybody. 2 days ago, no lah, fake news. 2 days later, real news, kill everybody. I won't be surprised. Donald Trump is doing to make money from insider trading and not to create confusion. Then after the confusion, I'm the sell ball. Okay, I can even tell me if not I do crazy things. Chinese say you know hang now. Yeah. Okay, which company is that? BWX.
Cross.
Ooh, this is exotic. It's exotic, my friend. I know. Okay, gentlemen, look at it. This is a fuck. Option minus first factor fail. Normal Tesla, 1 month got more option expiry than him. Then you compare to SPY, worse. SPY 1 week got more option expiry. S&P 5 SPX index 1 week got 5 expiry. This one the whole lifespan only got 4 only. Okay, let's go and count. For set learning, we don't count 5 days. We are going to count 16th of May lah. Okay, see the price? What's the dollar 53? Nice. What's the problem? What's the difference? Therefore, you look at the 56 here and look at here, the 33, you know it's out balance already. So there's, by the way, it's not you cannot trade. Just telling you warning sign to you that be careful. I think wrong. Our job is to be warned and to be prepared. This one cannot trade. Let's just look at chart patterns. But I don't think you can trade. Let's be honest. You see, look, and the money, zero leh. Zero, nobody to buy. Nobody don't even quote a price. Then 70 cents, how? It's a lot of difference.
1 year, you will die lor. If you give money,
I know, cannot before. I don't share, share a joke. I don't share, I think I shared with some of you. Maybe Dave and Christian here. Many years ago, I was doing trading. I trade when I'm going to buy this company, buy option. Then I was right. By the time I will do a trading, about 30, 40 contract open interest. I know I got still over there. Then I go for jetting for it, come back. Why am I take profit? Why am I take profit not trigger? Then I go scold them. So it's your take profit is based on last done price. Means that the price the buy price, sell price do not trigger before Last time your take profit your trigger price is based on as people done trades, execute trades. So the bid price ask price fluctuating now is indicative value. The bid price, the actual one, the actual trade is called done price. Means somebody buy at this price, then it got trigger. At the end, I must donate. I was in the money by quite a few dollars. I must have to give back. I must give back more than I give back a lot of money to the broker. You know what's the problem now? At the time I was young. I buy 2 contracts. I still must give money because I was in the money by quite a few dollars or $4, $5. I must give. I think I give $1.80, 150, 180, $2 back to the broker. Do you know why now? No. Do you know why I must give money? No. The open interest by the time I tried to close left 2 contracts. Who's the on the market? There's no buyer. I mean, I'm in the market. So we don't open interest. Just look at bid price, last price. And we try not to trade exotics. I teach you try to trade all these branded stuff like Target Walmart Marina. All these we trade hundreds of trades, thousands of trades over the last 3, 4, 5 years. So we are considered we don't like to trade. We don't like to scan for the best trade to do one. Sometimes best trade is like you go Orchard Road, go wander around. Don't know what type of people you find. Okay, girl, boy, or one also don't know. That's best trade or same. Okay, we find branded trades. That's why my scanner now for it's at least $50 billion. Even at $50 billion or $60 billion, sometimes we still find really weird companies. Okay, so don't be like me. Got 30, 40 contract open sales. The one I save. Capital good. I pay for capital. End up, yes, I still make money, but I feel that market maker make more money than me. Because I sell below physical value, intrinsic value. Okay, I explain the intrinsic value more.
Just one more question. When you open when you option this option chain, right? Would you be able to really figure out whether the market is going down, going up, or going?
So you don't, no. Because the problem with this trade, it give you this one because it's based on standard what you call standard deviation numbers or things like that. It's based on probability for expectancy of movement. The problem is buy sellers expectancy of movements, but it do not create directionality. Look at here. Here's a simple example. This one cannot use 0 cent bid, 55 cent ask. Wow, this is my best bet is like so many days, right? Okay, now let's go and find one big company. Which company you want to look at? Tesla. Tesla abnormal. So I think let's go look at. So Tesla, is that interesting? I like Tesla because I traded Tesla before. I love it. Tesla, we don't look at 17 17 next Friday so we know what 25th 13 days away which I repeat again, when you trade options short-term options in 2-3 days options versus 9 months 10 months options the option premium tend to be distorted. So most time we trade what 2, 3, 4 weeks 2, 3, 4 weeks up to 4, 5, 6 months. The option price is not so distorted. The longer dated let's say you go into a trade option for 2 years 3 years whatever tissue may not be valid. The option premium the delta 40 to 55 is only valid for trade up to 6 months only 3 months 6 months only. If you do this method, you want to go buy January 2026 no 2028 this delta number not accurate okay. Yeah, this is Vibu no difference wait, any good driver can drive any car, correct? Sorry only I can drive only my BMW only. Telling you wow, this driver very atas or you sell tapao incompetent driver. How can drive BMW only? No other kind of driver.
Remember this workshop is sponsored by me.
Actually, we never receive a single dollar from them yet. Okay, so my I want to support them if possible. They are trying to be a company. Okay, you can see here. At the money call 225. Okay, let's start with the basic option moneyness first. Okay, now this one let's say now. Remember the option moneyness range is can change anytime, and every expiry, the option moneyness range will change. Understand me now? That means yesterday, example, that's how 210 to 225 out of the money. It's only valid at this time. Okay? 15 minutes later, option price change. The range will change. The share price move. the range also will change. So you got two barrier. So this one I tell you, it's not dumb, it's dynamic. It's better for you. So before I trade, I just look at it. After all this one, 15 seconds, 20 seconds to calculate. Please, don't tell me I need 10 minutes to calculate this one. Please, my kiawa. Okay, let's go now. For sale, and the money where the current price is $252. So, and 31 cents. So, and the money is what price? The nearest price right is 2525. 2525. Thomas, excuse me, is 19 cents out of the money. So it's at the money. So okay, from 225 to what price is out of the money? Somebody?
10 cents.
What's the price here? What's the strike price here? Sorry, that would be 19 cents. This one 19 cents for it to be in the money. Okay, in the money. But since it's 19 cents out of the money, it's nearest one to it's considered at the money. So now 225 is out of the money, correct? To what strike price? Please. How you count?
Round up 20.
Around 20 correct? 255 round up here, $17 plus, correct? So put $20 So because this strike, all this strike is what 250 strike, correct? So around $20. So $20 255 plus 20 from 255 to 275 is what? Out of the money. Then 2775 become what? Far out of the money, correct? Then how far out of the money we go? Yes, can tell one look can already. It's $9, nine something option price, right? So round up to $10, 2775 plus $10 become what? No, cannot be 285. That's $10. 2775, 287, but got 287 now. Don't have, right? So then must go for out 290. That means that from this number here, from here to so 2275 to 290 is considered far out of the money. That yeah.
Arrive at far off the money, right?
Because why?
Your
My formula. You go and Google, because
standard
it's my what?
money one, money.
And this number change. If option price increase, that means volatility, the buyers and sellers expect increased volatility, right? If the buyers and sellers option price drop, the buyers and sellers expect less volatility, correct? So the option bindingness range expect a contract, according to buyers and sellers, option pricing, more reliable than give a stupid formula, correct? See money, follow money, because end of the day, no matter how much you like it or don't like it, we still make money. You want to make money, we have to take money from the money, so we must respect the money. Am I confusing you all? No, it's not. Just follow the money. Now, so from here, go money market. So from here, from 295 onwards, it's considered far out of the money. So very fierce. Far out of the money. Still got credit, my friend. Serious. Look, far out of the money at 300, still can get 380, 390 price. And underlying price, how much you need? 300, 305. Under price is what? 252 only, $50 out of the money. Wow, quite fierce. Anybody want to do adventurous iron condos? Daniel not here. Daniel said, yes, I want. Okay. It's just someone mentioned to me about probabilities and things. Okay, let's say now for learning purpose, let's say we're going to do far out of the money. So why is far out of the money now? What's the last number? The last number is what from here? Here is what? Here 290 is what out of the money? So for 295 is far out of the money, correct? Okay, let me show you something in there. You will die laughing, It's gonna be more fun. This is not based on delta, it's based on option pricing, It's come and say here. I do far out of the money. Sorry, this one cannot. This one cannot do because this Weibo don't have iron condos. You can gentlemen. Yeah. Okay, let's forget about it. So you can see now. So what means what? Telling me what's not very fierce, eh? Far out the money, still got $4, $3 option premium, eh? And far out, let's say not for linear, let's say far out the money is 210, and let's say 205, 205 is $50 out of the money, eh? And still I got $3 plus call and puts there. Wow, this is very fierce. It means that a lot of people buying far out the money options because they project it to move to potentially $50 or more. If everybody think at 305, no chance of being hit one, no chance one. Do you think $3 for $3 option pricing down there? Eugene understand? Eugene? This one highly volatile. And that's the reason why options is gonna be cost you $19 call option, no. Okay? This formula. Okay, now for say learning purpose, come. Let's focus on the call on the put side. Come. And the money call is what price? Start with Chris, easiest one. And money put what price? Okay, then what out the money range is at what price and what's Jane? 252? Put.
447, that's fine.
Go to how far out? Now I'm forcing everybody to think.
Far out.
No, how far out? There is a number. Far out the money must got number. And the money must got number, correct? Based on what? Based on option pricing. If the option price increase, then the moneyless range increase. Option price decrease, moneyless range will contract. Can you again? Every strike is 250 here, correct? So how much here? 16 something, okay. Round up to the nearest number is what? 250 strike, correct? It's become $17. So 2457 is out of the money. First strike price out of the money. Minus 1750. Go to where? Go to 230. From 24750 to 230 is considered out of the money. Then okay, next. Eugene, exercise. Then we know this is 230 is the last strike price out of the money. Then far out the money, start from where? Start from 227.5. How far you? Then from 227.5 to what strike price is considered out of the money, far out of the money? 227 here. 227.5 out of the money here. First strike price.
One something.
Option premium 940, 960. Round up 250 strike, right? Round to $10. So just mean minus $10. From 227, correct? First strike price, correct? Minus $10, correct? 2217 we will be your last far out the money lah. Then 250 onwards is far out the money, right? Look at delta number 19 18 still got $6 plus. That means okay, option moneyless range option pricing to go upside is higher, range higher. But the put pricing the range is smaller, but higher value. You see far out the money $6 plus Just now the cost far out the money, how much you need? $3, $4 you need. Means this is what called buys option premium. Buys and sellers specific. This one books don't teach one. Sell her learn by my wallet and my technically learn by my account, but actually anyway it's still funded by my wallet.
Is based on the comparison.
Option pricing. We take it the buyer and seller at definitive pricing lah. It's better that I think I forecast I listen news This is somebody go and quote the quote at $17 on the buy at 1750. The buyer on sell at 1745, 75. Somebody quote the price. And exchange US market got 16 exchanges. And the market maker monitors all these exchanges real time.
Which maybe I rephrase my question. Question is market expectancy based on the option price.
Yes.
Is going down. Can I say that? Because
They're pricing to go down, but is it going to go down? I don't know.
Oh yeah, price.
So market wise,
Sentiment.
we see that from the pricing of the options, that a lot of people are
Not people. It can be less people. I know I don't care less people, more people. I only care what? Money, money. Follow the money. Thomas, everybody selling. I got only got 5% buyers only. But the buyers of this 90% selling, 10% buyers. But the price keep on going up. So what? 90% buyers, sellers. Useless ah. We follow the money. 10% can push a price of 90 can in the price war 10% can push the price up against 90% sellers Sure what 90% sellers are what limit useless I follow 10% no. I simply follow money. I follow the money because I'll be honest if the big boys stupid they will run out of money very fast. You understand what I'm saying? This unfortunately is what we can see now. Can we more be definitive? We can't. We don't have the resources. You want to do it, you must do it as a team, no? I got a student learn from me options. I learn until I become CFO of hedge fund, okay? Hey, the guy give up trading already. He got burned again. The guy very adventurous, okay? The guy trade until TD Ameritrade I want to ban him. Because the account size too small. Every time break pattern day trading rule.
On stretch the
Mm,
limit.
yeah, that's the law. But our current brokers not a problem. Of course, unless I told him, that's why I keep on asking him,
Correct.
your brokers are how old? Because interactive broker doesn't mean he can do pattern day trading. His account is more than 10 years old. Cannot.
The Singapore one can.
Okay, so it doesn't mean like that. So just be careful. Not everybody the same. Questions? We get lost already. So this one is essential understanding. This one thing books and magazines and YouTube don't teach one.
So you can't use delta determine
Delta is a sub cannot. You can play cheat using it, but it's not so between option pricing and delta. Which one more accurate? Delta just give you a number. Like here, right? Here is what this number here. Sorry, just cancel here. This delta is 17. Don't tell me very much. But the option pricing tell me a lot. Delta 17 is $5 or $3 or 10 cents. Which one more important? Delta 17 more accurate or option pricing more accurate? So now even at something delta is actually $5 plus which is quite heavy You don't believe me? I show another company delta 17 only 20 cents and 10 cents only So it's telling me what? This a lot of people buy. It means somebody go and buy a 210 put and pay $500 per trade. That means for him to break even the damn thing must drop by $6. Drop to what? 204 Drop by 604. Sorry, I'm thinking myself. Remember the buyers and sellers, somebody buy far of the money. Delta 17 is actually indicative of what? This is a low probability directional trade. But somebody prepared to buy five, I make it $6 $6 here. That means somebody takes you can buy a 210 put at $6, make it around $6. That means your break even is what? 204 And 204 is sorry is actually how much away, no? It's actually very far away. The price now is 252 The share price is 252 for Tesla If for you to make money the Tesla must drop to below 204. In how many days? In 2 weeks, 5 days.
They might not be just option trader.
We don't care. Somebody prepare to it. Somebody buy insurance.
In here.
Now I don't know, but somebody buy insurance. Somebody is fearful now to buy $600 worth of insurance.
So the stock is paid by few.
We don't care. We just take it simplistic Because if you want to do what I call multi time frame exit strategies then different but make it simple. This trade. For us to make money, what is expiry is 204 and below. And unfortunately, this is 2 Fridays only friend. Only That means like what you say true buy insurance. Why buy insurance, sell insurance, we don't care But end of the day, we see money, follow money, Eugene, any questions? This is not ABC stuff. No, I was told no other guru school in Singapore that will teach until the point. And this one, now we're having option 101 theory session. That's why I get Angie to teach. Because Angie not like me, so passionate. I won't share. I do this point of revolution. Okay. Questions? Okay. Now, so let's go. Let's say now this one Delta 17, how much? It's $5. Okay, this one Tesla. Okay, let's go find a company. Let's go find Apple lah. Eh,
Yeah. Really.
AMT ah. A and AMD ah.
Semicon.
Now, just now we look at what day? We look at 23rd of April, correct? 25th of April, correct? So let's look at Delta 17 ah. Delta 17 ah. 17 here lah. What's the price here? Just now was $6, correct? Now Delta 17 here ah. Put aside is only 150, 140, 150 only ah. So you cannot use Delta number. Delta number is just an indicative number. End of the day, you must go back to the share value. Of course, to be fair lah, AMD Unit 93, our friend our friend stupid Tesla is 252. And not only yes, 2 days ago both 20%, $50. So end of the day, Delta numbers do not reflect the reality. Price, yes. Of course, it's not 100% reliable lah, but it's better than try use Greeks.
It means all the fundamental trader will die on
Fundamental they're not trading.
Tesla gone case already.
Tesla, don't give that. A lot of people during early 4-5 years ago, Tesla, I bought it, a lot of people shot Tesla, including me. Because the Tesla at the time was faking it until make it. Fortunately for him, Elon Musk, most of the time he said, really, really hold the flag and charge. Not all his projects successful, but two-thirds or 70% projects successful. Tesla is one of them. He fake it until you make it. Now compared to BYD, wow, biggest best car in the world, sell more than Tesla. Talking nonsense. I'm not interested how many cars to sell. I'm more interested what's the P&L. I'm more interested how much bank loans you have. How much cash flow. BBY definitely in debt. BYD definitely in debt. The company is not announcing how much money you make. I don't care. We are not investing in China household. We are investing in this company so we can make money. One reason I'm making money is what? Hype. I don't care hype, hope, illusion. I'm talking about what's the revenue per car? How much net profit per car? I sell the most car in the world, still lose money. Okay? So I said earlier, we are traders. We trade money. We don't trade anything else. In the longer term, if you able to understand money, follow the money, higher chance of success. Okay?
Did run back home or taking a look at that, very close.
Can't run away, man. Cannot here be 17 Delta, the other side the Delta is 25, 35. Cannot be one. Because the formula is almost the same. Because it's a theoretical formula. Same thing option pricing. Here is 150, the other side can be $4. If you got such numbers, if you got such numbers, here is $4, here is 150. You tell me I can do a lot of things. Let's focus on the market. But it's not smartphone. But I do like the big letters. I know. No, did not. Nobody want it.
Wow, your keyboard over $200 one what expensive one
Of course your own keyboard expensive.
I'm looking for
It's a new model, old model.
Should buy another kind that has a mouse pad inside. The one will be then you don't need a mouse.
That one with what you call the pad.
There's a mouse pad.
Yeah.
It's one more. Then you don't have to bring a mouse pad.
but too big already you don't want to so big. Yeah, it's already so big already. With the mouse pad, I prefer the mouse separately.
Let's focus them now. I say okay, wait, my apologies. I talk too much here. Let's go back to the slides. Let's go to the slide first. So you understand me now? So you understand theoretical numbers. Delta 17, IV 25, 100 is just a number. Do not indicative value. As a trader, we trade value. So sure, Delta 17, same expiry, $6, 140. So you cannot compare Delta or IV numbers compare. If you can do it on a selective higher end application basis, but and for now, don't touch it. Okay, sorry, but let's do fine. We still got hundreds. We still got another 280 sites to go. I want to finish everything today. Nah, because open interest versus trading volume is interesting, but we don't. In a historically speaking, open interest is used as a definitive number to indicate market liquidity. That was 20 years ago, 25 years ago. Okay, 30 years ago, not now. The last 10 years, open interest is not reliable indicator of market liquidity anymore. It's become what? It's currently is a bid price, ask price. That's why I say now, looking at the one, right? 80 cents slippage. All these are numbers. So open the buy price up by indicative value. It's interest to us as a is secondary interest to us as a comparative analysis on how active it is. Okay. Open interest is not referring to long. Open referring to outstanding short and long. So just in case you don't understand, sorry. If Chris buy 10 contracts, our friend Jean sell 10 and Dave buy 10. What is open interest? Plus 10, minus 10, plus 10. Let's start with you first. What's open interest? You buy 10, same contract. You sell 10, same contract, same price. You buy 10. So what is open interest? 10. Eugene? Oh, fail. 30. You buy 10. Hey, 10 contracts.
By then,
You think what? Unless you tell me buy 10, sell 10, buy 10. Same person, same account. Then become 10. But the fact you open 10, you open plus 10, open minus 10, 10. Still 30.
Okay.
So the open interest for what? All outstanding contracts. Okay?
See, there's a price.
No, I said what's outstanding contract? Be like that.
so it's not 10 minus 10 plus 10.
Can, if you have same account lah. Same account yours lah. But
Understand.
we're talking open market you got millions of accounts,
Yeah,
thousands.
we-
No, I said you buy 10,
You-
sell 10, buy that. 3 different parties
Trade it was. So it's
Creative
10.
and still end up creative accounting
Strict.
Because it's
Total. Total.
this is what you prefer.
Total.
Wow.
This is how I trick people. Oh, okay.
Not trivial. This is not even a trick question, it's reality question. Then our friend go and buy 50. Then actually it's now become plus 60. 80 correct.
Wait, up,
80 so it's not okay, so okay, now okay, next wait, 4 o'clock, I mean, next one. Okay, trading volume, something important. As a trader, as a price action momentum trader, short-term trader, you need after half an hour, 50 minutes, after half an hour, look at market, it's best to have at least 20, 30 contracts open, at least 30 contracts open interest, trading volume. Why is trading volume? Trading volume is referring to the number of contracts closed across exchanges in that particular moment, at that particular moment of time, on that trading day. It's not clear. So if you see open interest, let me go and see can do. I think here, I'm just wondering. Let's go find Mr. Weebu. See, is it open interest? It's open interest. Sometimes have open interest. Here, open interest here. Open interest here, we have. Yeah. Let me see. Oh, no. Don't have the price codes where. Yeah, open interest 5.6 million. So here, You see open interest ah. So it puts 80 lah, 300, 200 lah. Okay, we don't hear and no one. If you notice by now deep in the money or far of the money have lower here. 1,000 lah. Okay lah. Okay, look at it. The bid price how much? 55, 45. Okay lah. Last time price 45. Okay, can do. Okay, for this trading if you do trade I presume on Monday night, look, you see easily 50 to 100, 200. Okay, easy to have this out numbers. If you go in half an hour, at 10:30, look nice, capital bid price, ask price good. Then look at the volume. Don't have any volume at all. That's another problem. Because our volume is considered done trades. The bid price, ask price sui leh, 5 cents, 10 cents. Unfortunately, if there's no volume after 1 hour market open then that's what the hell's going on. You may want to consider another candidate. Okay? Chris, Eugene, okay lah? That's what Tuesday night we take a look at it, okay? Yeah, don't have how to wait? Let me go and do something for it. I think we need to find something. Where's this? Here. Here got volume here, got a volume here. Here. We take out a change. Let's put down here. Let's see the volume here. Where's the volume? It lost again. Sorry. See here. Open interest. Okay, let's do it at money. This one is what? 2 weeks or 2 Fridays down the road. The outstanding contract is what? 1,000 open interest 659 volume. Okay lah. This one 1,200 trading volume. Okay lah. So this one is a mixture of. It's not bad. Can pass. Sometimes sometimes look something look very weird. The trading volume is 2,000-3,000 contracts. Open interest only 200-300 only. Also can. Means that most people for trading. Most important, the leading indicator for everything is what? The bid price, ask price is the indicator. 5 cents for $4.50 is very good. Okay, let's go and find one bad company.
See a very
Sure.
yeah, like 1,000 plus.
The problem with the volume we do not know. The CNC open interest 3,000 open interest That means what we know, there's one fat cat or fat wheel go put too many contracts there. How come 110 call got 3,000 open interest, 2,000 volume cannot be the rest is hundreds That means maybe one cat one big fish go and do something weird. I don't know. Okay. So but in general you know that it's got high liquidity because the trading volume and the open interest is okay, hundreds and we're not buying 10 contracts, 50 contracts one contract, 2 contracts Okay, question next yeah.
What we can click for the configuration, right? I saw there's what bid size, call size. So is that the number?
Don't need, not reliable.
Not reliable.
Because that number can be fake. Like level 2 codes like that. Can be fake. You can see down there somebody want to buy at this price, 10 contracts or 300 contracts. Not accurate one. Yeah.
Sure.
We know take annoyed with this. Yeah.
So open interest it's I put in an order, but it's not filled. Can I say that open?
Yes. Open interest is contract outstanding.
So if I cancel it, then the number will drop.
No.
Let's say I can't cancel my
You close the trade.
close the trade.
Close the trade, yes. You open a trade, you increase open interest Let's say buy
Cancel. So
no fee, it won't come in How can we be outstanding?
so
If like that pending orders not fee you come in and wow, then totally cannot use it all. Because somebody can fudge the numbers. Somebody can say can fudge 10,000 contracts at the ridiculous pricing won't get fee one. Yeah. So it's wrong. The open interest refers to what? Actual contract outstanding. Somebody buy, somebody sell. Money transacted, they call that. Pending orders are queuing to buy at ridiculous cheap price or whatever, at ridiculous high price it's not counted that way. One more company for comparison only. Come, one company. Eugene, any company? Okay, I take Starbucks. Starbucks, let me play with sometime. Or try this one. Safe Bulker. This company we never trade before. ING, we never trade this Safe Bulker before, correct? SB.
No.
Let's go back. Let's go see. SB, good company, bad company. First, option money, so no release. If you're Thomas, can I do bottom fishing? Yes, you can. Up to 180 days away. But that's okay. Next, most important, fail crack. Option together. Next, option strikes. Wow, worse. Only what? 250, $5, 750. Secondly, worse. No bid price, no ask price. So this one definitely what? Yeah. Wait. You can see delta number. Let's see delta number. Where's delta number? Delta numbers. That's weird. Check delta numbers. Where's delta numbers? Delta, and the money called delta 12. And the money put 810. You see delta numbers. $5 and the money grab. 12, 10. Even you task them cannot see the price. See delta numbers the reference. Wow, cannot be. And the money delta 10 and the money delta 18. Don't touch. Even you want to do bottom fishing. Okay, let's go find Mr. Starbucks. Okay, let's go for Harley Davidson. H. Home Depot, very good. Harley, how about Harley? AR, right? Let's go for High Hotel. I don't see High Hotel for years. High, is that what? Sorry, something is not. Gentlemen, can see this company is what? Gentlemen, this company is called known as Hyatt Hotel. Wait, you see, where is it? Yeah, sorry, give me up. Let's go H first. Yeah, Hyatt Hotel, correct? H. So, yeah. Wait, no, see how first. Doesn't mean it's branded is good.
Hotel mah.
I show you. H. You see Hyatt Hotel here? Yeah, there? No, I say one. I don't know. But anyway, we don't care. Most important, you must recognize. Can trade now, cannot. Next, let's look at the May series. Not too bad. Delta 56. Okay. Bid price 890, 610. A bit big, not surprising. Delta for the put, wow, 35. No good. Bid price 490. Ask $8. Don't trade. Okay, don't trade. Okay, especially for learning purpose.
Marriott.
MY. Maybe I want to better. MAR.
Yeah.
It's March, yeah. Okay, trade up, not too bad. Let's go to trade 5th, 13 days away. You see option now? Delta 36, not very good Delta 58, put not very good Most important, you can see the bid price, ask price Bid is what? 8. Ask is 10 Hello, $2 It's very borderline case. It's going to be like gray, very gray already, not dark yet. And then the day, ask yourself, you think it's worth it? Is this how many days? 13 days, 5 days only 13 days only. I think good idea. I don't know. We'll see chart pattern there. Okay, next. Any more companies? Job needed. Option manliness range test. And the money call is how much? $227. So what is out the money range like? Based on ask price. Okay? Don't think too much. Based on ask price. So 230 out of the money, correct? 230 to what price is out of the money? 237. Okay, I take it. So 240 is far out of the money. 240 far out of the money, correct? Okay. Look at delta number. Just now far out of the money is about 20, 30, 20, something 30 there. Here it's 17 only. So we don't use delta number, we use option pricing. You see, look. This one is far out. This one 17 is far out of the money, correct? This is considered abnormal. Okay. You see, because right, look. So this one not reliable. Let's go to Starbucks. So not totally not liquidity or okay, name branded, but option pricing, not option premium moneyness is very lousy. So you understand the word option moneyness? If referring to all things option pricing related, be BR spread, strike price, option moneyness. Okay, now let's go to Starbucks from 17. Sorry, 20 of 20. Oh, slow mover Starbucks. And the money call is what? Okay, and the money put is what? Eugene and money put. Okay. What is the option out of the money range? Huh? 81 to what? 81 to what? Out of the money is not a single one. It is a multiple different strike valuation, correct? Are you Christian? Chris, correct? No. And the money put is 85. We all agree on correct. Simple. This is Vibo. Vibo nicely give a purple color. So we know that is one. Because you're not so sure count lah. Current market price is $84, $85.43 lah. So 86 definitely in the money lah. So 85. So the next one is 85. 85 is out of the money by 43 cents lah. So out and the money call here lah. And the money put here lah. So out of the money means that next price 85 and the money here. Out of the money is 84. So 84 to what? $1, $2, $3 here. Okay, see ya. What's the thing here? So 80, 82 here. 81 is far out of the money. Okay? Then here, $2 here. 81 to 79 is considered what? Far out of the money. Correct? You see here now. From here, $3. I make it $3 easy. Here, 84 minus 3 is over here. 81. 81 to 80, 80 to what? 80 to 78. Then 77 onwards is considered far out of the money. That's why I do use delta number. If you notice right now, the delta numbers and the money's range is not very agreeable sometimes.
Round up. You can
Your job is to expand out further out in time.
round up. Or
Can. Up to your discretion.
Oh.
It's better to increase than minus. Okay, the mid price is 281 and so okay, $3. Okay, but if you want more conservative, you want to put $4 no, I have no problem with that aspect. Okay, wait, sorry. Let's go back to subject here. We'll never finish it like that. We still got 100 word slides. Don't need IKU. You understand? This one is important to determine one interesting factor is whether can do day trading or not. Do XD price action momentum means 2-3 days, 2-3 hours trade. If you think it's 10:30 only got 2-3 contracts only then you know that it's not cannot do harder to fill. If you do a company that's got 3, 4, 500 open volume done already that shows that your 1-2 contracts easy to go out. Remember, it's not the trade good or bad. It's a whether trade got liquidity to go out. So repeat again. These are the major factors that drive all option pricing. The only one you need to worry, only one that we are most interested out is what? This one. options buyers sellers price as per market order is the leading factor that drive pricing. It's not the share price influence. It's not the strike price of underlying. It's not the number of days to option expiry. It's not price action volatility or share price also come to play. But most important, end of the day, the price of options is not depend all this. The biggest influence, Thomas, buy on buy is crazy. Oh, every time buy so expensive. That is the market, leading market indicator. Yes.
Good. One slide, right? This very good.
Mm.
See, when you buy spread,
Mm.
then one with a very good volume and one with a lousy volume, that means it will be harder for you.
No, not a problem. Depends what's the primary objective. That's the reason why when you do spread trading, it will not be that fast. Very hard to go in fast out. Because as you know, 1 leg buy, 1 leg make money, 1 leg lose money, right? So and like I said, you one leg may be high liquidity, 1 leg may be lower liquidity. So these are things, liquidity we can solve it by through time. That's why fast out for debit spec, credit spec are much harder. Unless you hold to expiry. Okay? Okay? All these are what? All these are not that important. Most important, this is buy and sell. That's why our friend can make extra 70 cents. Turn chicken also from where I also don't know. Okay? Any questions, Barisan? Next. These are some of the exchanges in America. In the past, TD and Ameritrade, Option Express, we trade to them. But we trade directly through them, we got one major issue. We need to have a big account size if we want to do day trading. So now actually, so the money the market makers the prime brokers get all the price across the board. Everybody. This one just some money. In between got dark pools there. Okay. Question anybody? All current Singapore brokers now, if you open the last 5 years or years, you can do pattern day trading without having the 5,000 account size because you are not going to do your trade order direct, do not go directly under your name to the New York Stock Exchange. Is they will go to the market as a pool order. Pool order means they pool order together. These are some of the ding and dong. We have buy thing. Anytime you buy a call or buy a put, means that you want to buy a call, you pay money, correct? Therefore, you have the right because you pay money, correct? You have right. Okay, but you buy something, you cannot lose more than what you pay lah. So, ladies and gentlemen, in my class now, it's my time. We are primarily focused on what? All buy trades only, or predefined risk trade. We cannot because the buyers look carefully. Let's say buy a call. The buyer of call have unlimited upside leh. You go buy 100 call, the share go to $1 billion. You make $1 billion minus 100 leh. But in reality of life, legally it's unlimited upside. But reality of life, there's law of what you call financial markets. If you go and buy a call 100, you go to 200 you die laughing already. Okay, and you make what 30,000%. Sorry, 30x, 50x return. So the buyer of the call have the right to buy the share. So it's basically long lah. The buyer of the put have the right to short the shares or sell the shares away lah. So you want to, let's say you are doing share replacement trade buy a call options If you want to short the shares, buy a put and buy a put and shorting the shares which one more risky? Which one more risky? Short share more risky because short shares what? Have unlimited liability. The buyer of the shares have unlimited profitability. Bracket in front, bracket behind. Okay. So I repeat again, you don't I think enough already, don't bother. Don't bother. Again, see market, trade market. We don't chart pattern is good, but I prefer to see option pricing. Option price chart pattern is what? Past tense. The price action candidate is present tense. Option premium is future tense. That's the reason why next Friday call is $15 or 50 cents. If next Friday call is $15, that means that the buyers and sellers of the market can expect to move more than $15. And it's only 50 cents only because the buyers and sellers of the market say, this company is worse than Totti, worse than Snail. Totti is faster. So the price is a leading indicator of market expectancy. But what John asked me, he said, can predict direction or no? I won't say cannot lah, but need higher understanding of skills. So I would say answer no to you lah. But if you trade long enough, you can see potential price movement before actual move. I think Andy will know talking about. So for why you get out before the market price drop? We can see the pattern. Dynamic car after a while, you will react you will react to the car before the car move. Especially you're a seasoned driver, correct? Sometimes, this driver anyway, before he do anything, you slow down already or something away. It's called skills and competency. This type of thing what I call trade under stage of intuitiveness. And I do that, I try for you. Okay, okay. These are the four factors. We use only 3 only as a percent. 1, for trend trading. For direction trading, we use technical analysis. For price action momentum trading, we use candlesticks, 2 hours. For income trading, we use quantitative option premium analysis. You notice when I do income trading, I don't look at chart pattern, draw nice here, draw nice there. I just simply follow option pricing. Okay? Unfortunately, can the market be wrong? Yes. But you are not going to fight against the market, correct? Because between me and fighting against the market, I tell you, counter trend trading or contrarian trading need high ego and high skills. I can do it, but I don't do it. I feel that it's no fun. I myself take the easiest route, follow the market, follow the shark, just follow that kind. Okay? Question so far? So this
Basic you're supposed to learn, right?
you ain't learning it already. You repeat section why last 3, 4, 5 candles, right? This one present tense You're not going to look back last 10 days or 25, last 3 months Trend trading, go back 3, 4 months looking, option premium, option. Gentlemen, I'll teach you this. See market, see option price, trade option pricing If you learn all these 3 competently and comfortably, later on you specialize in one I say go ahead But before you specialize, please like somebody NG say finish your 3 years house trade first done your 400-500 trade 1,000 trades first So later on if your chosen method start to fail because of market changes, market will change right now. Then you may want to go back to your ABC basics learn all 3 methods again. After 1-2 months after 1-2 months or 3-4-5 weeks you can always change back, adapt it to the latest most suitable strategy for you to trade the market, because market is forever changing. Question, anybody? Yeah, income is here, number 4. Because we base option pricing, because option pricing tell us the buyers and sellers are pricing market expectancy range of movement. Chart patterns cannot tell us the future. Can tell us, you will tell us the directionality if no other things but it will not tell us the market expectancy range of movement. We can see the bullish trend, right? Last 30 days. But can you tell me what's the expectancy range of movement? We don't know, but option can. If the money call is $25 for next Friday night, that means the buyers and sellers of the call are expecting to move up to $25 range. Then you know the $25. The pattern is strong bullish night. But 2 weeks option 50 cents $1 only. Then you know this option is not worth trading. Why? The chart pattern look is 3 months bullish night, very nice, right? And the money call for 2 Fridays, 3 Fridays, only $1. It's telling you what? Let's say 25th of May and the money call in $1 only and you have the trade night is 6 months long means the buyers and seller of the options, call options and the money call option is telling us you will not move more than $1. The chart pattern may see the 6 month trade night strong The buyer sellers don't see the way So I be best is always to follow the professionals and institutions and the big boys. The price options we just follow them. Okay. Chart pattern trade night is nice. Option premium will tell us even more things. And the money call for 25th of May is $1. And the money call for 25th of May is $6. You know what's the potential expectancy of movements. Okay? If the option too cheap, okay? Unless you got insider information that the rest of the market don't know. Here, all options are forward-looking here. You see lah. This trade is interesting. You see lah. Bid price $8, ask price $8.40, strike price $60. It's telling me this company within next 23 days is a highly volatile company, highly volatile move, because if $8 divided by $60 is almost 13%, I think, almost 13%. That means they expect this company the potential reach of 13% up. That's one thing. But look at it, and the money call and money put is $153, $116. So it's telling you what? If this is a real market live code now at 11 p.m., 10:30 p.m. on Monday night, and the money call is $8 plus, and the money put is $16. It's telling what? It's telling you the buyers options for the put side. A lot of buyers pushing the price to $18, $16. Anyway, this I think it's best to be learned in a live market context. You can unspec. If not, Gene and Eugene is falling asleep. Okay, questions? Next, option trading is multi-dimensional. Shares buy to go up, shares sell to go down. Options can do all these three. Ultra now, later on when you during the picture program, I will teach you how to do what I call ultra double direction trade. Breakout, shoot up, I make money. Don't move, we lose money. That's called breakout trades. Okay? Here lah. With 3K account size, you can trade so much lah. Okay? Okay, now 4:30, I think better stop. Yeah. Be careful. This is a rule of trading. Low risk, high returns trades. Means that a trade that is $500 can give you 1,000% or give you 500% returns. Okay? And the trade, $500 trade, they give you $100 return. Which one higher chance of success? A $500 trade, they give you 300% return, or $500 trade, they give you 50% returns. Which one is better for you? What?
Second.
Higher return, lower returns? Yes. Because lower returns with low capital risk also higher chance of success. So low risk means fixed risk. Thomas, I do a spread trade now. I pay 50 cents for this trade. I can make $200 for this trade. That's 5% return. So low risk, low capital risk, high returns are also at low probabilities and high skill trades. You can make money can you high skills. Okay? Trading I hate saying this trading is not about system. System will give you an edge. The edge is only as good as the user. Porsche 911 300 guarantee worldwide. Tested Why the person go and hit 3 cars and burn himself to death? So it's high skills needed Question anybody?
Good for you, say high skills of what are different types of high skills. Are you going to what? Chart reading.
No.
High skill also.
High skills means what? You have an extra edge of 3, 4, 5% range. 2-3% range is more enough already. NG trades can do it in 2-3 minutes, up to 10 minutes. For you, you may take 10, 15, 20 minutes. Skill include competency. Recognize the potential move before it moves. Understand? I don't mind. I start saying, doing too much. You learn enough when doing live market part. This one again, some of you learned before. Return over risk, same counter, same time, same strategy, everything same. Same capital also. Trader A buy a trade that cost him $200. Okay? Make $800. Trader B sell a trade. Target profit, make 100. Prepared to lose 800. Trader C sell a trade, make 200, lose 800. Which one have a higher chance of success? Let's start with the juniors. Hey Dave, don't be like that. I thought you understand this by heart now.
Sure.
I go toilet, you go think about it. You all write down. Write down. Quiet.
Yeah.
Okay, I give a tip. Trader A, B, C are doing the same thing. Okay? Trader A is a buyer. I paid $100. Potentially I make 800. Trader B and C are trying $200. I can lose 800. This one is good question. Let's start with the juniors. Then which one high chance of winning? Wait, I wrote down. When I say high chance, I'm not referring to single trade. I said highest winning possibilities over a period of time. Not one trade. One trade Chinese say tikam one. 800 lose 800.
So in my sleepiness, I also think
Make
that
make 100, lose 800.
mine is B. Mine is B. No, in third.
Well, next one not. I think next month there's gonna be a PC show coming out again.
Huh? Wow.
You buy a new one?
Yeah.
Check lah.
All these are inject.
It's not
Laser.
laser.
This inject.
Then buy laser.
So you buy
inject.
Epson better. Because that one you can just
Come. Hey, you all going home already?
B.
buy
Make 800, lose it. Make 100, lose 800.
Okay, how many people say A? Make 800. How many people say B? How many people say C? Ask yourself. Trader A, make 800, correct? Lose 200, correct? Targeting 400% return. Trader B, I lose 800, I target 100%, I make $100, 12%. Trader B, C, I make 200, I lose 800. So gentlemen, Trader A is a buyer of this $10 spread, pay $200. Trader C and Trader B is the seller of the trade. So ask yourself now, do you think so easy to consistently targeting 400% return? On paper, you might say, this is what I call, you are attracted to call a law of big numbers. 800, afford lose. Fortunately, you can lose 20 times in a row, okay?
I cannot continuously make it.
And ask the question now, which one easier to achieve? 25%, 12%, 5% first.
12.
When I put percentage term, then you understand now. But normally I 他们不会把输能把 sure make money.
Total.
Whether we lose, unfortunately, like Toto like that, you can lose 1,000 times in a row. That's why 10,000 you can lose 10,000, but Toto we can win big lah. 1 week now can cover 10,000 times losses ah. But it's not Toto like we are talking about trading. Trading is about sustainability and durability, sustainability and durability over a period of years.
Obviously, win-lose ratio.
Mission not enough.
This is like you can afford lose.
No, unfortunately, your win-lose ratio is good, but you never include the probability of success. Win-lose ratio on paper lah. Implied you win one, lose one lah. Unfortunately, I got people target 300% return, I lose 25 times the road, never win one time, okay? And complain same time, how can rest people can't all make money, lose money? People target 20-30%, you target 300% return. Same method. It's iron condor method lah. People sell far out the money, right? You want you sell near money lah. Make 100%, 200% return lah. That's a complaint why I lose money. It's not a method. It is your objective and what your application. So you sell far out the money, definitely higher chance making money. Of course, sell far money definitely return lower lah. You sell near money very tight, of course money make bigger lah. But chance of winning is much lower low. Market not stupid low. Remember to do that. So remember, do not be focused on tan dory, make $1 million. Stop. Before you do that, ask yourself, it's real now. Make $1 million, the account size. How much risk is that? I don't know how much, how much leverage risk is that? Okay? Especially trade futures one now. Wow, shook, man. Make a lot of money, but you burn fast. Question about that? So nowadays, your jump down is focus 10-20% first. At 10-20%, cannot warm up properly, 800. One time 1,800%, 200% return.
Say aim for 12%. 12%. But
No.
that one is a seller. But we are the buyer now.
Yeah, but we're talking about trading. So this rule apply whether buyer seller. If you target 100% profitability, before you hit 100%, like him, well, just to $5, they'll take from me. I said, no, leave it alone. Market gain 490 also. So if the problem in the focus of focusing your returns, you are increasing or decreasing your properties. Which one easier achieve? Make $1 or make $3? Which one will come first? But is it make sense? Is it Thomas? This $1, $3 are all things the same lah. But sometimes okay, this one need a disclaimer. You must focus. What is the market giving out rate? Market will tell how much you give lah. How much you give out rates. If every day you move $5 a day, you target $10 profit, I think it's big wishful thinking. That's why when I do trading at time, when this class to go buy a trade, I will tell you a trade. Your profit is not the trade is not the maximum profit. It's to maximize learning experience.
Were you looking for the mid price?
Which mean price?
Mid price. Sometimes you want to pull back, the system will show.
No. I will teach you. For you, once you enter a trade, we don't time the market. We just say go buy a trade for $3. Normally for your case, for directional trade 2-3 weeks trade, maybe we take profit at $4 or $4.50 or $5 or we don't keep more in there already. Depends how far much you do or depends everything. One, how long your options, the expiry, and how much price volatility you have. This one we cover more on Tuesday night. Tuesday night, we may or may not do live trades because Donald Trump and friends is pushing the market. Wow, one more yo there, one more there. People do scalping trades are all happy lah. If not, if you don't have scalping skills, don't trade. So rules, right? The rules are very simple. I don't care long or short. Return is not how much money you make. Risk is how much you're gonna lose. Probability, what's the chance of winning or losing? The biggest profit with the smallest loss is always the smallest probability. I don't care how skillful you are. Okay, of course, if you compare good skill, no skill one, of course, you still have edge. But in terms of if we apply, now we're talking about individual also because you choose strategy, you can target returns, correct? Now, medium loss with medium profit, better properties. Small loss with bigger loss, higher probability. Smallest loss with biggest losses, highest probability of success. Like selling naked puts have a higher chance of success, but the smallest profit, you lose one bad trade you lose 10 trades, 12 trades. Therefore, higher chance of winning Other people love naked puts because higher chance of winning and easy But if you lose wow, one bad trade 10 trades cannot come back. And your trade is 30-day cycle So 12% trade always have a highest long-term success than a 400% trade. Look at it, I got big disclaimer. If all other things be equal, you are fucked trader, also everything will fucked up. If you're okay, then this rule will come to your age. So achieve some skill competency first. Chris, any question? So our target profit maybe I think for us this trade, for the coming class, may not be 100% returns or 200% return. Most probably we target very short-term trades. Okay, because of the nature of learning. I told you upfront, it's the best time to learn to trade, correct? Because all the volatility. This one, every day I trade more because it's once in don't know how many years maybe once a decade The last time was happened in 2000 2020 Wow, that one crazy Royal Caribbean wow, 1 month do 7 trades Every trade is 100% return By the time I lose money I already make 7 trades already. So don't be greedy because we don't know when the market will flip. So please read son. Anybody want this ebook now? There's a book written by Jason Limore. Reminiscent of a Trader is not written by Jason Limore. It's written by a stupid ghostwriter tapping on Jason Limore's name after he died. This is actual book. Okay? And he still a lot of things there. Still a lot of content from there. Then he said, based on that, but he's written by a ghostwriter. This ghostwriter, you don't know Jason Limore. So he said, after he died already, somebody made use of his name and write his books. By the way, to be fair to him, he's the first big time speculator. He win, lose, bankrupt 3 times, 4 times already. I think before he died, he's smart enough to start to fund a small trust for his family. Okay, by the way, how he died now? Kill himself. Okay. Come on, be Jesse Livermore. Yeah. You know, he bankrupt 3 times and at the end commit suicide. In his day, he's a superstar. So learn from him. Don't be like him. Because why? It's not he don't have skills. He got skill talent, but I tell you now, I've been there before. Not suicidal, but trade until Chinese said 做for路 You don't know the reality from the world. Go and sleep, you think you close the trade. Wake up, you're like, what the fuck? Close the trade. Let me check. Instead of closing your trade, you triple your shots. And you still make money. This type of trading is very bad. Means you internally lose control. Okay. You ever hear the word you understand the word blackout now? Blackout. You ever hear the word called brownout now? Okay, show you this. I hope please don't be like don't treat until like that. I'm not joking. Like that. No, it's nothing to do with the book. This one is called internal experience. Your ebook is it? It's a copy, yeah, I think so. It's a 1930s book.
Looks like it.
Yeah. Brown me treat until blank. I ever checked before. I see people. I was doing long pre-option club I was running. I was running a trader cell group. Then we have the time got cyber cafe, so we go borrow friends some trade. Okay, excuse me. Hey, Thomas. What happened to him? Sibei quiet they school people. He's a brown. I said, okay. It's okay, it's still breathing. You see something. Then look check. Okay. Almost limit. Instead of 1 contract, you put 10 contracts. Wow, bad. I close for him. Shit, after school you, I fuck, I close for him. After 5-10 minutes, relax. I close already. You make some money. Because why? Instead of 1 contract, you take 10 contracts. He max up his limit. Then he panic. If you like that panic and pray until like that, I tell you, sometimes you stop yourself. Either you go trading or here and here you're not ready for it. We do not know until you cannot stress. And then then you see your true character will come out. Okay, my job is to make sure you win lose at $100 level. So you can warm up first. If you can handle $300, stay at the base. NG lost one trade too long, lost 17,000 US dollars of futures. Come inside, talk to me about it. I scolded her. Publicly lecture her. Because the trainer based their risk on margin risk, not actual risk. The broker charges so much money, therefore you cannot lose more than its margin. And broker charges the margin. Okay, that's how people do the same. Sell nickel puts the same. Sell 100. Sell 80 nickel put. Margin $800. Therefore, I'm reach $800. Hello, sell 80 put. Convert to share $8,000. The broker give 800. Keep for you block $800 margin. Okay, it's actually $800. It's just a deposit only. Question?
The moment you sell, certain of deposit, but when the price movement, it will increase the
Of
margin.
course. You sell 80 put, right? And then I said the broker hold 20%. That's 1,500 margin. Hello, when you convert when your options can convert to shares, that's 8,000, not 1,600. But people based on 1,600 to trade. Cannot be assigned one.
So it cannot be the same.
Yeah. That's why people got burned. What? Jason Chow put CD lost $400,000. Jackie broker lousy Then another person I lost 100,000 Tiger broker lousy They don't say it's all their fault. Cannot assign early one. I got long leg, therefore talking nonsense. Okay. Anyway, this book, I think if we can, Jean, I'll send to you. It's good reading.
More psychology. Very, very interesting.
No. It's actually learning from his experience. I share a lot of psychology because in that I ever trade until I don't like trading. I still make money. That's bad. Trade until brown. I trade people go crazy. You think last time Fujitsu laptop made in Japan, I throw the laptop on the floor and jump on the laptop with high heel shoes. Not me. I don't wear high heel shoes. That time I was doing what you call trader cell groups. So they invite people in. Then I thought this is good behavior, like translate like me to over like that. Everything you want away, cannot be that way. I said, please, don't be like that. You respect the market. I don't care. Oh yeah, and somebody I don't know, make sure you die. It's like character. Then I shoot her away. Then another friend, our start another group, bring her in. I said, well, this is yeah, right. I said, siao way. One night lose money, I throw the thing on floor, jump my high heel shoes. At the time, it's of course cannot borrow. It's books older than you. Tell how you shoot that what siao because lose control. Then later we heard from other people. This place is Empress Dowager is working place. He said, yes, even MD don't dare say no. Not MD will suffer for it. You know talking about Empress Dowager, or Emperor behind the scene. So the market don't give a hook to you. At the time Fujitsu laptop was made in Japan. Anyway, don't be like that. If you are like that, don't trade. I tell you, don't trade. Because you cannot take it out on your key on your laptop and things. Don't be like heard stories. So from American friends. I say trade until the guy go crazy. Take the keyboard, bang 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 bang, like screaming. Don't do like that. If you reach a stage like that, I think Dr. Fu and professional psychologists can even help you. If possible, attend Dr. Fu class. It will teach you, will give you a different point of teaching learning. I send to you I have a book. And the book is older than you and me. Questions? I think enough. This is trade. I love trading. I don't trade, but this called Chinese say 无脸不脸, if you lose control, if I could make $10, It's, by the way, it's not my record, okay? It's in 60 minutes. Just imagine how much you can do. And this is a $36 company. If you go and trade, if you go trade a higher value company, nothing much. Anyway, I will talk about it later more. This is more important in trading. For you by stage of evolution, let's focus on one trading first. Buy call, buy call, buy call, buy puts. Easier to handle. So most of your trading will be doing something intra fortnight or intra month. I may not want to go further in time. Because why? Anything more than 2, 3 weeks, 4 weeks now, it's going to be very expensive. In fact, it's so expensive, may not be good to buy by itself. Some of you were talking about calendars and things, not you. I'm talking about budget traders, okay? I think that's our neighborhood. But for buy company, we go for short-term learning. Most important, must be in your budget. So what's the budget? 3,000 account size, maximum per trade, $400 per trade, no more than that. Days to expiry. The last period I do zero crack. One I do zero cannot whack. The zero DT one. You got chong all the way. Can I say that one I put a group say got bullied by Donald Trump. The day I shot 300 points, okay? I was 100, the trade was 100 over points out of the money. If I stay below, if we go by 150, 120 points, I make money. Chong sapa tiang. So obaka. That's kind of life. But the risk is $400 capital risk. In fact, I post a trade to everybody. In fact, I was thinking to do a trade on Monday or Tuesday. But maybe I'll do it on the lower level micro index. But will not be zero DTE. Everybody don't mind. So, ladies and gentlemen, Zhao Fund, your trading is focused on these 2 time frame for maximized learning experience. And not only that, also focus because the shorter time frame, therefore your capital risk exposure must be lower than doing 100 days or doing 300 days. Okay? Hello, 2, 3 days cannot swim properly, you won't make it. Of course, if you do a 5-day trade or 10-day trade and the market give you in 3 hours, take it put inside. Then I say, chief figure do I don't do part 2 or part 3. Nothing wrong. But our target time frame, there is what you call targeted trade duration, targeted profit, and how fast the market give us. That's our story. Sometimes I enjoy 10, 15 minutes, half an hour, 2, 3 hours can make money. Sometimes I take 2, 3 days, 4, 5 days. So be it lah. But it's considered part learning. Our job is not to maximize profit or whatever. Our job is to maximize learning experience. If the market give you in 2, 3 hours, tomorrow enter again, or same night enter again. But do be careful, don't blindly trade. Sometimes second, third time, fourth time, the more you do, chances of you losing must be higher. Agree lah. Doing the same thing after 3 times. Of course, there is seasonal type of thing, especially in short term and short term. If you do a 3, 4 days straight, higher chance. But if you do a 3, 4 hours straight, it's going to be lower chance. The shorter the time frame you trade, the higher skills you need to have. Okay, the end of the day, so I say, as I drive my car, drive a car at 80, I drive a car at 200, that's a lot of difference. So the speed for us in this case is became based on 2 things: dollar value, how fast it is. This is very important. These are the 3 factors that affect your profitability, also known as losses. There are 2 things that you need to, 2 things that is not undetermined by you. One is market directionality. 2 is option premium volatility. Recently, our friend got bonus of $70 because of this factor. Option price suddenly spike up for whatever reason, he got few extra $70. One prepared to sell at 720, market give close him at 790, 490. So the other 2 time frame and duration, time decay is not particularly big deal. A lot of people say, Thomas, I don't want to buy call options or buy put options because of time decay. Don't talk nonsense. Time decay is never your problem. Ask you a question. Okay, let me explain to you. Like here, like that. Let's say now we're looking at Starbucks. We don't Starbucks. Let's go and look at Tesla. Tesla easy because Tesla, we already got reference number, already got. So now Tesla, we do a 25th of May, next Friday lah. Next Friday, next Friday, 25th. Is it 25th or no? 2 Friday down the road. You see, Thomas, 2 Friday road is about 13 days now. 7 days plus 7 days plus 3 days, 13 days away. Can you see it now? Option price $19. Thomas, time decay there. Every day, okay, I will lose $19 of time decay. $19 of time decay divided by $19, it's $1,900, right? Divided by 13 days. What's the time decay per day? Take $19 divided by 13 days. What's the value? 130, 140. Every day, don't move. 130, 140. What's the price action value? Every day for Tesla. $20. You worry about $1.30 time decay, or you worry about $20 go against you. So time decay is not the problem. It's the directionality, because Tesla every day can move $20 a day, right? You worry about every day time decay, every time decay 130, time drop by 130 a day, or worry about $20, market slap you. That's why I say, as a thinking trader, we think that way. Thomas, I go and buy this option. Buy this option. Every day time decay of time decay of what time decay of $1 and $1.30 a day. But price action value every day is 30 cents. I mean, every day have price 40 or 50 cents. Time decay 190. Then you're screwed. Then I ask you, say, what type of trade you're doing? You understand me? Price action volatility, that's Coca-Cola, 60 cents a day. 50 cents a day. You go and buy, you go and buy Coca-Cola at Tesla price for 13 days, $19. Every day is $1.30. But price every day can move potentially average movement 50 cents a day only. That is your problem. You choose the wrong options. You deserve to lose all your money. So yeah, my apologies if I sound aggressive and quite long, but it's for your own good. I said choosing options is very important, right? Too expensive, you run. That's why every time you trade, it's always cost reference against price action value. We don't want to pay more substantially, we don't want to pay substantially higher than price action value. Okay? So what about time decay? $19. Pass out a call day. Excuse me, one day can move up 2,000, drop $2,000 a day. $20 a day. Which one you worry about it more? Time decay, or you worry about it? Thomas, every time I buy, I lose money one. Nothing wrong, wrong. Okay, look, I'm finishing my last 5 minutes. Okay, I think 5 minutes. In this case, you buy lose money. Then what? Ladies and gentlemen, why don't you sell? Sure lose money one, correct? Then why don't you do opposite? Sure make money, Thomas, I buy, I lose money. Sell, I lose money. Then whose fault is that? Left, right, center lose money. Sorry. Now that is to set you along, become functional thinking trader. I will teach you is all what we call suitable methods for small account size of 5, 10K. If you're trading $500,000 or thing like talk to me privately, then I will advise you to the strategy trades in even. I suggest you start doing at least like $500, $1,000 level first. If you can handle at 500, 500 or $1,000 level properly, don't do it. In fact, to a point, I have stopped teaching my futures class already. Any questions? I think it's enough for you to understand enough already. The rest is all secondary memory. Yeah, one good night. 10 o'clock, 11 o'clock enter make money. 11:30, 11:40 make money. 11:50 enter again make money. All this thing. It's a good night trade. But of course, this one you must be awake. Daniel, I want to do a trade. I say, well, bad risk. I tell myself, no, I will close at 2 a.m. in the morning. I say, okay, you go close at 2 a.m. in the morning, go ahead. You go and do a spread trade, 0 DT for a company. Why I don't like you come to do 0 DT, because you may lose control and your trade your option become shares, long shares or short shares. Then it become a bad idea. Unless you want the shares, it's a bad idea. Questions? I think it's 5 o'clock enough. So I see you on Tuesday, 7:30. Physical Don't be like that lah. You what tired learning from me already, is it? You want to see our son already, go become happy wanderer already.
Tuesday ah. Jialat eh.
I sent you a date so long already, 1 month plus ago, I think. Huh?
12, 15, 17.
Okay, Tuesday, how many of you can or cannot? Can you? How about you? How about you? Angie, no problem. Angie said happy go lucky now. Then Daniel should be no problem. You don't come, it's not my problem, his problem again.
Sorry? The continuation of this
Huh?
the next Tokyo.
No, Daniel is now playing with A&A. He's renovation his new house. Thursday I may change it to another day, but I'll talk to you later one by one. Thursday, how many of you cannot make it? Thursday can't make it, how about you? I can't do Friday, I'll be honest. Friday,
Obviously cannot but you have
I know for sure that some may not, yeah.
US market.
Yeah.
Only
Don't mind.
Japan and US
I'm
market.
doing so much, we can always extend it to another day, no problem. Okay? You can't make it. I mean, I just put in a group consensus.
Alternatively will be Monday or Wednesday.
Monday I also don't mind doing, but you're depend on you lor.
Which Monday? This coming Monday?
Yeah, this kind of Monday.
Or that means Monday, Tuesday, finish everything.
Can
That's if everyone is
you never agreeable now.
Chris is not.
Very difficult.
Then Tuesday, Wednesday.
She got problem on Tuesday. Thursday you got problem. Sing Pai Ki leh. Which school in Singapore? I try to adjust to make students.
Just set a date.
I lie myself. You don't tell your problem. Afterwards, you attend next class, I must take repeat fees of 15%. Retake admin fee of 15%. Yeah, I'll try to. For you, not too bad because you take up practitioner class. You can always re-enter. You can learn so many times. For him, I'm more focused. I'm more worried about him because he signed for the basic share to conversion class, a very limited type knowledge. I know that I want to start him trading. And you are better trading. I tell you, very soon new rule come out. If you after piss me off, I become Donald Trump. If you are within the 3rd month of class, do not do 50 trade 1 month, I will excommunicate you out of class. Some used to be 1 month of demo trading. 2nd month don't know live trade, kick you off class. Well, not because I want to do such thing, but if you don't trade enough, no matter how many hours you learn, you'll never get learn.
Go down a lot.
Huh?
As compared to in my time.
No, I turned out a lot. I was